What's going on, guys? Welcome back to another video. In this video, we're going to be talking about XPENG and how they just got a 20% increase in price target from Bank of America. Now, we're going to break down their new coverage on XPENG and go over some of the things that XPENG has been up to and what positions that I'm looking to get into for the run-up to Neo Day, because XPENG is most likely going to be a sympathy to the run-up to Neo Day. Now, before we get into all of that, if you guys enjoy this video, please go down and hit that like button and hit that subscribe button so you're never late on any one of these new videos that I put out, and you can learn about some new stocks and keep up with all of your favorite ones. Now, if we go over and take a look at XPENG, the ticker symbol is XPEV. Now, this topped out at around 72.17 and went on a massive run from $18 about back in September to that $72 mark, and then came ripping back down to about $38 and has had a little bit of a bump in share price over the past week. Now, a lot of what this decrease in share price had to do with was bank downgrades. It was nothing really to do with XPENG as a company. They're coming out with new technology, they're expanding into the European market, and they're doing all the right things that investors would want to see. It was really just the institutions that needed to downgrade the company because the company had run up so much. Also, this little dip is right here was most likely the result of institutional selling and rebalancing for the end of the year. We see this on all of the really hot stocks of the year that have went up so much. Like this company quadrupled even more in price, and the banks just can't, and the institutions just can't handle this in their portfolios. They need to maintain balanced weight in a lot of these stocks, so they're kind of rebalancing and selling off some of their position so that they can go into 2020 pretty even. Now, if we go over and take a look at the exact article, we can see that Bank of America raises the price objective from 43 to 51.1. Now, this is a 20% increase from $43, and B of A notes that XPENG's free charging program was available in 100 cities as of December 29th, after launching with 24 cities in late September, and they're targeting 200 cities in 2021. Now, the firm says the program improves customer satisfaction and will be positive for XPENG's volume sales growth in the long term. Now, they also highlight that XPENG's Class A-plus class sedan that's slated for 2021 will have delivery likely in Q4. They're also going to be releasing an updated G3 SUV and a version of the G3 with a lithium iron phosphate battery at a lower price. Now, they expect this continuous cost reduction on the battery to help improve its vehicle margin and profitability. Now, they do cite some downside risks, including the intensified competition from Tesla and other EV startups. Now, this is basically, they're saying Tesla has a large market share right now in China, and so does NIO. So that's going to pose a little bit of an issue for XPENG in the future. But if they can keep coming out with new technology and gaining market share and offering incentives to their consumers, we could see XPENG start to gain a higher market share, which would give it a higher valuation, and the share price would go up. Recently, XPENG has gotten a couple of other bank coverages. Now, over here, we can see the Daiwa analyst Kelvin Lau initiated coverage of XPENG with a sell rating and a $32 price target when shares closed at $44.31 that Friday. Now, it appears this is all about valuation, and basically what he's going to be looking at for this is sales numbers. What I've said in the past is that the sales numbers are important when determining the valuation of these electric vehicle companies, but they're not the end-all be-all. It's mainly the technology and the innovation that they're coming out and what they can put in their vehicles compared to what the other electric vehicle companies are putting in their vehicles. And then we can see an analyst at Deutsche Bank initiated coverage of XPENG with a buy rating and a $58 price target. Now, these are two very different price targets, and one of them is mainly based on the pure valuation of the company, and the Deutsche Bank analyst is going to be more speculative in terms of what technology that they can come out and the new vehicles, along with the classic sales numbers valuation. Something that really sets XPENG apart from the other Chinese electric vehicle companies is that it announced a free recharge program, and it's open to XPENG's first non-operating vehicle owners during the service period. So these people can enjoy 3,000 kilowatt hours of free charging for their vehicles each year. So this means that they can go charge up their vehicles for a really long time for free, and it's giving the consumers an incentive to buy this product. We have also seen XPENG try to break into the European market. As we see over here, XPENG stock is up as first electric SUV is delivered to Europe. So the company will deliver 100 of its G3 vehicles to buyers in Norway, making the first time it's directly delivering to individuals in Europe. So this car has a range of 323 miles, which is pretty standard for electric vehicles, and sells for $41,000 US. So this is a pretty competitive product, but the problem with this is that XPENG currently is only directly delivering their vehicles to consumers. They haven't really announced any plans for a factory or dealerships or even charging stations that they're going to put out in Europe. All of that is really being done in China. On the other hand, NIO has said that they want to put up a fully functional factory and dealerships, a full distribution chain, and charging stations in Europe throughout 2021. So that could pose a little bit of a problem for XPENG, since their main competitor is looking like they're going to beat them into the European market. Now, with NIO Day coming up on January 9th, NIO is going to announce its new vehicle and most likely going to announce a 150 kilowatt hour battery. But as we saw before, the share price of XPENG ripped up when NIO did as well, and even went higher than NIO. But when we take a look at the option chain over here, we can see for the January 15th expiration date, this covers NIO Day. These contracts are pretty expensive. So I'm predicting that all of the other Chinese electric vehicle companies like LI and XPEV are going to have a sympathy run up to this NIO event. Now, I already have a position in LI. I have the $28 strike for January 15th. I just scaled in today and yesterday, and I'm going to be holding those pretty much until NIO Day. Now, if I can make these contracts free and hold them through this date, I will, but if not, I'm most likely going to sell off before. And we can look at the open interest on this option chain. The NIO option chain has a lot more open interest, but the $45 strike has an unusually high open interest on the XPEV chain. And if we go all the way out to the 50 has double the open interest of the 45. And these contracts are trading for around $1.32. So you have about a triple of upside if you're buying these contracts. So if you guys want to get into these, I would say going with LI, the contracts are a little bit cheaper and the implied volatility is a little bit lower. That might be smarter, or you can just buy shares. But overall, XPEV is going to be an amazing company for the next few years, and I'm seeing that they will be one of the top electric vehicle makers in China. Now, that's going to be it for this video. If you guys enjoyed all the information that I had for you in this one, please go down and hit that like button and hit that subscribe button, and comment down below your thoughts if you're going to be getting into XPEV or if you already have a position in this company.